show. And over the next half an hour, we will take you through all the action or the lack of action in the markets. Most of it seems to be on the sell side. This morning, Agam, we started off it's a very tough market this morning. We thought 23,800 would hold, but that's been given away, and how? Threatening 23,700 now on the downside. Is the Nifty in a no-trade zone?
Yeah, good morning, Samina. So, yes, it's a challenging market, and after almost 2 weeks of, a struggle or, a kind of distribution that we were seeing in the market, it's finally given in, and we are again slipped below the previous swing low. So, I doubt, Samina, that 23,800 had any significance, because on the closing basis, 24,000 was a mark basically which markets were defending, and we decisively breached that mark yesterday after the underperformance in the banking heavyweights. So now the next level is the long-term, moving average, 200 days of exponential moving average, which lies around 24,540 area. That's the major zone that we have for the index now. And banking, particularly because till last week, in fact, for the initial sessions for this week also, we were seeing some sign of alignment between IT and banking. So that raised hope that we might make an attempt of recovery and inch toward 24,500. But it turned out to be otherwise, and now we are seeing profit taking in both IT and banking space as well. So all indications are in the favor that we are going to test 23,540 first before making any meaningful recovery. And banking is something that one should keep a close eye on, because sustainability below 50,900 may result in further decline towards 50,000 and maybe lower. So both the indices having a negative approach. So sell on rise is something that one should maintain.
Sell on rise is the word coming in from Ajit. Ajit, again, stocks on your radar this morning. Do you have any buys or do you have any sells? How are we approaching them stock-wise?
So, Agam, I guess, IT is still comparatively better, and the way we are seeing, especially the IT heavyweights holding strong, one can continue to look to accumulate on depth. So, Infosys is one bet which one can look to go long. Even during this corrective phase, and 1825 is something that one should maintain as a stop loss for 1930 as a target zone. At the same time, we are seeing distribution or fresh breakdowns of these names in the capital goods space. So ABB is one such name, wherein we have seen fresh breakdown, and 6540 is what we are eyeing as the next target zone. So with stop at 7,000, one can go short in ABB at current levels.
ABB buy Infi, and I believe Bhavin as well as a call on
what's turning out to be a very, very tough market to deal with. But let's talk about maybe one or two counters which are in focus right now. Pardon me. Ajit, let me talk to you about trend, because what we've seen is a little bit of a arresting of the sharp correction that we've seen in trend of late. And again, I'm sure that everyone who is sitting with a little bit of cash, or for that matter, everyone who wants to potentially enter the future space here as well, they would be tempted only because there's been a little bit of consolidation. At this point in time, do you think it would be risky to take a long position, or do you feel otherwise? What is your reading on trend at the moment?
So, Agam, it's the first phase, I would say, that decisive corrective phase in trend after the phenomenal surge from 1,000 to 8,000. Because earlier we used to see more of time-wise correction in the stock, and it was strongly holding the short-term averages, which clearly indicates momentum on monthly, weekly, on multiple time frames. So this kind of corrections now, I feel that price-wise, it might be over. So maybe close to around 6,000, 6,080 is something that we have multiple supports. So it might hold that level. But time-wise, at least, it should spend at least a month or two around the current area before making any meaningful progress or any base for the next leg of the year move. So one should not hurry into a trade. If you are planning for accumulation, then it is okay. But derivative trades means leverage position at current levels for aggressive upside is something seems capped. Because short term around 69, 80, 7,000 zone, I expect the stock to witness multiple resistances also. So the risk reward is also not favorable for short term trades.
Well, that of course is Ajit's view. Bhavin, you want to come in on Trent and Britannia for intraday only. And the reason I ask is...
Thank you both for joining us and taking us through your views on the markets. Of course, it's a day where we're seeing further selling, follow-on selling, if I can call it that, specifically in the broader market.
Edition of FNO Spotlight. Thank you, Agam. Thank you for watching us. Of course, stay with us because we've got the small and mid-cap show up next.